Hello, Oracles. Well, today we're going to dive into the charts and we're going to take a look at how far down can we go for Tesla stock. Now, this is not a FUD bringing type video. This isn't me saying, oh, the world is coming to an end. This is just going to be similar to what we did earlier this year. For those of you who have been around for a while, know that we went back up to that 313 level, and I was tracking all of the levels of support on the way down and tracking gaps down to that 247 level. At that time, that's when Chicken Genius had come out and made his $140 prediction. So it was something that I had mentioned as, putting it on our radar, but I wasn't sure if we were going to fall down that far. And now here we are into the low 120s. So what I want to do for you guys is just give you a full transparent look at the charts to say, look, these are the levels of support below us. These are the gaps that we have below us as a potential that we could get down to. Not saying that we will get down there, but I just want to show you guys what the potential is. Now, a lot of this is driven by the macro environment. Obviously, plenty of discussions out there about Elon selling, his political tweets over on Twitter, all the different things going on. I'm going to erase all that noise for right now. We're going to look strictly at the charts. And then we're also going to talk about some of the fundamental things that are going on with the company in 2023 and what my strategy is going to be going through the next 12 to 18 months. My personal belief right now is that the next 12 to 18 months are going to be the absolute most prime buying opportunities we can have in not just Tesla stock, but the entire stock market, the housing market, many other areas. You look back to 2009, those were the prime time buying times for housing, for the stock market. And I think that we are going to be going into a very similar time in 2023, maybe into early 2024. Kind of depends on how the Fed is going to raise interest rates with their pausing or maybe pivoting. So just going to give you guys a broad scope of what the information is that's out there, what my strategies are, just so that you guys could take that as some information for yourself so that you guys can utilize that information when you make your further investment decisions. Again, none of this is financial advice, just another perspective that I am seeing from my side. And so looking at the charts, of course, we have this massive fall that is going on at the moment. So we were down a 1.76% on Friday, closing at 123. Now, we had gotten Elon coming out on Thursday, giving us all of that information that was kind of very awesome because it cleared a lot of the air and a lot of the questions that we had, a lot of the theories that I was having. He reinforced and said that that was true for most of them. But of course, we still came down. Looking at the volumes, 210 million shares trading hands, 145 million, 167 million. These are massive volume trades. This is not Elon selling. You have to remember that Elon cannot sell until January 30th based upon the information we have right now, assuming that we are going to be getting earnings on January 25th. So if that's the case, this is not Elon selling. This is most likely margin calls. We had $5 billion worth of margin calls coming through. We've got some more word about perhaps some very big institutional holdings selling out. Now we've got people coming out, looking at the macro, even Elon saying we could potentially be getting into a deeper recession. That's very much like 2009. If that's the case, who knows how far down we could potentially go? Elon said that the board is looking to do a buyback. However, they're waiting to see what the Fed is going to do because they're not just going to go out there and do a buyback if the Fed is going to continue raising rates, which in turn is going to bring down the stock price even more. So just things to pay attention to. We're clearly in this massive tumble fall right now. So how much further down can we go? So if we go back in time, the last time we were at these levels is in September of 2020. So right after COVID. And what do we have back there? Well, this is when we saw the first split that came through in August. So we had seen the split. This is where we ran up into the split. And then we came down after the split, kind of traded sideways for a little bit. And then we got the S&P inclusion where we took off. And so looking at what we have for support, so we did hit that 122 support. That is a very strong support that we have, and that is what we bounced right off of. So we're going to be paying attention to that. And again, the RSI right now is 19.82. That is extremely low for where we're at right now. So that's extremely oversold, waiting to see some money come back in. Chances are we are going to be pushing up to get back over that 30 level. I just don't know when. I am anticipating still getting this Santa Claus rally. Maybe we get a little bit of a run going into the end of the year, especially with production and delivery numbers coming out on January 2nd. Looking at my area alone, last week there was a lot of inventory that was around for Model Y, for Model 3. Currently, there is zero, absolutely nothing available in inventory right now when it comes to any Teslas in my area. I am in Connecticut, so I have Rhode Island and New York City that are both the closest to me for areas to pick up, and neither of them have any inventory in Model 3s or Model Ys. And so, with that, we do have the potential of maybe running up into those numbers. From there, maybe we continue to dead cat bounce down. Again, truly don't know what's going to be the catalyst behind us falling further, but if we do, the levels that we have to look at are that 122 level. Below that, we have a level at 109.42. So right around that 109, 110 level is another good level of support. And then we always have that $100 psychological support level down below that, which you can see here we battled quite nicely. I'm actually going to put a line in to draw that so we can see it for later. So we've got that level at 100, and then below that looks like there's a level at 91. I'll draw a line there as well. So then below that $91 level, we have this little gap here that goes down to the $81, $82 level. Below that, there's another little gap that goes down to $76. And then we do have some gaps that go down further, down to that $60 level. Now, if you guys are watching Chicken Genius at all, that's the level that he called us pulling down to is $60. Now, again, I don't know if we are going to pull down to that level, but he was right about 140. I'm just putting this on the radar. That is all. And we do have a gap that goes down to 59.65 here. So if we hit that $60 level, we will probably fill that gap in. And so if we do end up filling that gap, those prices go back to June of 2020, which is right after we started climbing out from that COVID crash. And so looking at the fundamental news that's out there right now, we did get word that Shanghai is closing their plant for the remainder of the year. So now there's multiple sources, so it's not just Reuters. I did retweet the Reuters report that came out, but there were multiple sources that were saying this. Troy Teslak said that this was most likely going to be coming. The thing is that Tesla hasn't confirmed it. Tesla previously in the month denied any rumors that they were going to be shutting down at all or slowing down production. We're now getting these reports saying that the first shift has been informed to not report to work until the first of the year. Of course, lots of different speculation around what is transpiring with this. And so we don't know if they're going to be doing this because they're retooling. We don't know if it's because they're trying to cut down on all of the inventory that they have because they're introducing hardware 4.0. We do know that they did come out with a patent for a high definition radar, which Tesla said in the past they were not going to be using radar in their FSD cameras unless they came up with some sort of high definition radar. This is now something that maybe they are going to reintroduce. I don't know if it's for FSD purposes, don't know if it's going to be for anything else. Truly don't know. This is all speculation, but the timing of it all would make sense if they were going to be updating all of their vehicles with hardware 4.0 and adding in the HD radar. Also, don't know if this is part of Project Highland. So we do know that they were over in Fremont. Sounds like Fremont's going to be having their line shut down for a couple of months to update for Project Highland, which the speculation around that is for the Model 3 for perhaps the structural battery pack going in. Not really sure exactly what is going on, but it sounds like Project Highland is going to be a major update that is going to significantly reduce the cost in all of their vehicles when they produce those going forward in the future. Seeing as we may potentially be getting into a deeper recession based upon how Elon and the board feel, if that is the case, perhaps the timeline for Project Highland, which originally was slated for Shanghai for Q3 of 2023, maybe that's getting bumped up to now. Maybe they're going to be updating it and putting out Project Highland now so they can reduce the cost of production of their vehicles in Shanghai so they will have more pricing power to be able to adjust prices later on this year if need be. And now when it comes to the pricing power for their vehicles, here in the US, they have increased the incentive up to $7,500, which is the equivalent of the EV tax credit. Now, the difference is right now you would have to take that model from inventory if you have canceled your previous reservation. I did get contacted back from Tesla. I asked them, hey, can I use my reservation and then get that pricing and take the $7,500 off of that? They said, no, you have to take a vehicle from inventory, which means that taking from inventory is the new pricing. The pricing right now for the same model that I wanted is $65,990. Previously, it was $59,990. That's a $6,000 difference, which would have made a big difference in my choice to buy it. I was still going to say no. I'm going to get into that in a minute because that plays into my investing strategy for 2023. But just to see that Tesla is doing this from the investor standpoint is good because that means that anybody who has been kind of putting it on hold and waiting is not just going to be able to kind of double dip on this. They're going to have to take the higher priced vehicle with the higher incentive off. Now, don't forget, going into next year, it's actually not going to be as beneficial for the consumer because they're going to be getting the EV tax credit, which means that they're going to pay that full price and they're not going to be able to reap the benefits until they file taxes next year. So, right now is actually the best deal that you can get for the vehicles. Obviously, as I had said before, this is really clearing out inventory. I'm hearing word from many people all over the country here in the US that they are running into that same scenario where they had a lot of inventory previously in their areas. Now they have almost nothing or nothing at all. So obviously this is working. And as you can see here from Holmar's catalog, the US inventory is plummeting right now. So with this new incentive that did come out on that 21st date, it is plummeting hard. So they are really being aggressive on flushing out all of the inventory that they currently have. And so while a thought and concern is the fact that, this is going to hit their margins because they're giving this massive incentive, we have to remember that they have been becoming more efficient, reducing costs. They don't have the same ramp costs here in Q4 that they had for Q2 and Q3. They are also going to be having, if Shanghai truly is shut down for this last week, that's a lot of bottom line savings that they're going to have from expenses that could potentially offset this $7,500 incentive here in the US. So, a lot of different factors. Obviously, we are not going to see these numbers until we get Q4 earnings, but this is also going to give Tesla a lot of data when it comes to, how dropping the prices this much is going to affect demand. Because if we see demand picking up significantly with this pricing here, that means that going into next year with the EV tax credit and then going into 2024 with that same rebate, Tesla will have a better understanding of how their manipulation with the pricing power is going to affect the demand. Right now, obviously, they're clearing out inventory as it is. As we go into next year, if they say, you know what, we're going to hold prices steady, but people can get the EV tax credit, let's see what kind of lead time this ends up building up for the demand. Obviously we saw the demand coming down and a lot of people were concerned about, demand falling off this cliff. Well, now Tesla can say, well, hey, maybe we drop the prices by $3,000. That's going to increase demand. Maybe they'll have a 5 to 6 week lead time, which is actually what they've been striving for is right around that 6 week lead time. It's nice to have some in inventory so people could get them right away, but having a 6 week lead time is kind of close enough to where people can say, I don't mind waiting that long and I'll place my order. So just I think a lot of things that Tesla is kind of putting out there right now to run some end of the year numbers. Maybe the demand was a little bit lower, so they're trying to push it higher. Maybe they do have that hardware 4.0. Maybe they are just looking to get some data. It's probably a lot of these things all tied into one. And you guys can let me know your thoughts in the comments below. What you think is going to be transpiring over the next couple of months, if it truly is going to be a hardware upgrade, if it was a demand issue, why you think Tesla is making all of these moves. And so now with all of that said, my strategy going into 2023 is truly no different than 2022. The only difference now is I'm going to be doubling down when I see us getting to that bottom. Now, again, I do not know where that bottom is. I don't know if it's going to be at any one of those support levels on the way down. Right now we're at that 122 support. If we get down to 110, is that going to be the bottom? Is 100 as the psychological level going to be the bottom? Are that $80 to $90 level where those two gaps are, is that going to be the bottom? Or are we truly going to bottom at that $60 level and fill that gap at $59 as Chicken Genius thinks? Nobody knows what's truly going to happen. So being an agile investor, as we were all year long, is going to be the most beneficial thing for you and your portfolio. I am going to maintain my $25 a day adding in right now. I'm not going to touch that. What I'm going to wait for is I'm going to wait for the production and delivery numbers to come out, see how the market reacts to that, kind of do a new assessment as to where I think we are going to see margins coming in for the Q4 earnings. And then it's really not so much of how I think the company is going to perform, but how I think the market is going to react to how Tesla has performed and going forward. Because again, if we have some bigger money that's pulling out, if, right now Elon did say he has no more sales planned for 2023. Some people are saying that, maybe it's some sort of manipulative thing that he's got, saying if he gets margin called and somebody else sells his shares, then that's his cop out for it. I'm not going to speculate on that. I'm just going to do what's best for me and my portfolio. I think the company is still going to do extremely well long term. I just updated all of my price targets through 2033 for anybody who is a member or patron. You guys can see all of those numbers. And I'll share the updated numbers with you guys next week for what I came up with this week as the end of the year comes around, because we've got to do our giveaway to whoever was the closest for our previous contest. So I'll share that with all of you guys. But with my strategy, staying agile that way allows me to just keep on adding, lowering my cost basis. And then if we do end up getting a Q4 number that causes the market to sell off even further, don't forget, I think right around that time, we're going to be getting that February 1st date of the interest rates going up again. I think the Fed is going to give us another interest rate hike, which in turn is going to pull the stock market down even further. We are probably going to see the entire market pulling down until the Fed says we are pausing. That's most likely what is going to happen. There's a number around the 3,500 mark for the S&P. We still have about 10% left to go on that. So how Tesla trades off of that, if they're going to trade at the beta of 2.0, perhaps Tesla comes down 20% from where they are now. Perhaps they pull down just around that $100 level. Again, truly don't know, just going to pay attention. But as we get down to that level, at that $100 level, I will increase my daily allowance to $30 per day. I will keep on monitoring it from there, but I'm going to continue to build up cash. Cash is still going to be king. This is what all of big money is doing. This is what big companies are doing for their own businesses. This is what Chicken Genius is doing. Not to say that he is right, but a lot of these big name players that are out there are seeing these things on a larger scale. And long term, it's truly not going to matter. I've had conversations with many of you saying that, I kept saying, and many other YouTubers out there were saying 300 is a great buy, 250 is a great buy, 225 is a great buy. I still believe that is true based upon my long-term thesis. Obviously, the lower the price goes, the even better the return on your investment is going to be. So yes, I think those prices were great buys. That just means that right now I think it's an even better buy. If we come down to 100, it's an even better buy. That's just the way I am mentally preparing myself for next year. I tweeted out that when I was a kid growing up playing baseball, my dad called me the weatherman because I always pitched in the gnarliest weather that was out there. Didn't matter what it was, I went out there, I threw that baseball, and I actually did better in those conditions. As I got into my 30s, I started doing obstacle course races. That's what these medals are behind me right here, from all of my obstacle course races. I ran in some of the gnarliest weather for that as well. Just seems to be that that is what comes into my life. That is what the universe has presented me with, is hard, gnarly weather to deal with, and I have to learn how to get through it. I have learned how to thrive during some of the gnarliest weather. My race in Iceland was 24 hours. The first lap started at 42 degrees and raining. The second lap, it was snowing. The third lap, it was freezing rain. Everything, all the obstacles were completely covered in ice. The fourth lap, it was 20 degrees, and then we had the northern lights come out. And then by my fifth lap, the snow came back, and it was snowing on everything, and the forecast said it wasn't supposed to. So absolute madness, and I thrived and completed 37 miles of that obstacle course, and I was happier than anything. And people are like, are you nuts? It's just the way my mental preparation was for that. I prepared myself to enjoy absolute madness in the weather. This is what I'm mentally preparing myself for in 2023. I'm like jonesing. I am excited about what we could potentially see, because I know that going through those races actually made me stronger on the other side. That is how I feel 2023 is going to be for us. I truly feel that this difficult storm that we are about to go through is truly the time that we are going to build our fortunes. This is not going to be a year where we are going to see our net worth go up any significant amount. For those of you guys who are members or patrons, or for you guys who watch my monthly videos, I show you guys my net worth. This year, as of right now, it is up $30,000 year to date. Last year it was up 56,000 because I had just finished getting myself out of debt. So 2 years I have built this up. I have prepared myself for this. I didn't know that we were going to be facing what we are going to be facing next year. I just wanted to get myself to a place where I could be as agile as possible and be able to invest properly with as much as I possibly could in different areas. I am now ready for this. I have prepared for it just like I did preparing for all of my races. And this is what I wanted to encourage you guys to do all year long is prepare for things like this and be agile. None of it was financial advice. I just wanted to share with you guys what I was doing for myself. And now here I am ready to tackle it. Just super excited for what is going to transpire in 2023 and how I could potentially set myself up to be able to build that fortune and my net worth to grow even faster as we come out of this storm. And so when it comes to Tesla specific, again, I'm going to increase to $30 a day if we get down to that $100 level. And then I'm going to save that cash up and I will deploy more at that $100 level as well. If I see that we are going to potentially come down further than that, I will then build cash back up again, and then I will deploy even more. I'm just going to do that rinse and repeat cycle, sort of like I am DCAing on this dead cat bounce on the way down, but still adding every single day. So I'm kind of hedging on both directions. You know, a lot of people who hedge do the short on one side and then they go and run options on the way back up. I don't like to short, especially when it's a company that I love as much as Tesla. So the way I hedge for myself is adding daily, just in case we have hit the bottom already, but I save up cash to take advantage of the opportunity if we come down further. And so my advice to you guys, and this is advice, is just mentally prepare yourself for an absolute shitstorm of a year. It's not going to be pretty. I cannot fathom us doing any sort of bull run and coming out of this unless the Fed pivots of some sort. If the Fed pivots, then we'll reassess at that point. You always have to be able to adjust and reassess things on the fly, especially in a market like this. This is why we need to be agile, but mentally prepare yourself for what could potentially be a worst case scenario. Mentally, I'm preparing myself for a potential of us getting down to $60. I'm hoping we don't get down there, but if we do, I am mentally prepared and I'm financially prepared to take advantage of that opportunity. And because I have my long-term thesis that has not changed, I will be even more excited by coming down to those levels because I think that it'll be a narrow window of time that we'll be at those levels. And then when we come out, it'll be very similar to how Apple and Amazon traded coming out of the 2009 recession, where they came out very strong. And I think Tesla is going to perform the very same way. So let me know your thoughts in the comments below. How are you guys mentally and financially preparing yourself for 2023? What do you think is going to happen with the entire economy and with Tesla stock over the next year? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.